What's going on, everybody? Thank you so much for checking in. In this video, we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over some stocks that we're watching for the week ahead. These stocks include names like Apple, NVDA, Tesla, AMD, and Meta. We're also going to cover VIX, which is the volatility index. We like to cover VIX just to see where implied volatility is right now in terms of SPY, which will help you during your options trading. So let's go ahead and get started by first talking about SPY, and we're going to do so on the daily candles, where we can see that SPY last week moved back above a very significant line, which is this gray line right here. But before we get into how significant that line is and why it is significant, let's talk about some things that are happening this week on the economic front that could potentially send us further up or further down. So first things first, we have the most important event happening, which is going to be the CPI report. Last week proved to be very bullish. However, there wasn't much going on the economic or the earnings front last week. This week, we are getting a very important report, which is the inflation report. And you can see that for the last few months, inflation has done a good job of coming down, but just recently it has been climbing up. So the markets have been bullish because they're confident that the Fed is finished raising rates. However, the Fed has said it over and over again that they are willing to raise rates if needed if inflation continues to go back up. And so it's very important that inflation shows around 3.7%, preferably lower, closer to the Fed's target of 2%. Apart from the CPI report, we also have the monthly retail sales report that's expected to update us on October sales. Coming into the holidays, we want to see retail sales going up because we want to see consumers spending. Now, speaking of retail, big box retailers such as Home Depot, Walmart, and Target will also be reporting earnings this week. So you got to remember that big box retailers and retailers in general are facing consumers directly, and they'll tell us more about consumer behavior than any other report would. So this is very important to pay attention to, especially when it comes to going into the holidays and going into the fourth quarter. We want to see what guidance they're giving and what their expectations are from the consumer. Last but not least, we have the government shutdown that's supposed to end on Friday. So the extension that they voted on 45 days ago is supposed to end, and the government is at a threat of a shutdown once again. Lawmakers will need to find a solution, or else political uncertainty can bleed into the market as we've seen it do before. So now that we've talked about all the economic updates that we're expecting for the week ahead, let's jump into our charts. First of all, as we mentioned on CPI, we have it back above the 100-day moving average. If you've watched our recent videos, we have been talking about this moving average, but more importantly, we have been talking about this level right here where we got rejected in the beginning of October. If we look back on our chart, we see that in the beginning of October, we got rejected right around 438.60, which was the next leg up before it sent us back down. And so by the rules of technical analysis, if we were to make a high above this level, then we would be reversing trend and making higher highs, which now sets us in a bullish trend on the overall chart. So buyers need to maintain this 438.60 level in order for us to continue this rally. As we mentioned in our last few videos, it is likely that we will get a fake out breakout above this level. So it will fake it a few times before it holds this trend. We saw that happen last week when we got rejected at 438.60 and came all the way back to 433. But nonetheless, you can see buying volume stepped right back in on Friday and bought us back up, closing us above 438.60 and above the 100-day moving average. These are very significant levels to close over, and it could be setting us up for a very strong rally to close out the year. Now, here are some shorter term levels on SPY if you are looking for a trade. As long as 438.60 is held, then buyers are in control. Even if it dips slightly below it, it's completely fine. However, if it dips below it with strong volume, don't be surprised if it dips all the way back to 433. As we mentioned earlier, last week was not very eventful in terms of retail earnings, in terms of any economic reports, but this week is filled with economic and retail data, and so it's very important that you manage your trades correctly. For us, in our group, we are taking long-dated calls, especially on tech. We are taking them all the way through January and March in order to set ourselves up and allow for breathing room on our chart. So it's very important that you give yourself time, especially if you are swinging anything. Now, the next resistance on SPY is going to be 441. 41.09. And the simple way we got that is because we looked at the Friday highs, and this is where we got rejected on Friday. You can see there was a monster vertical rally. Now, any trader will tell you, or any experienced trader will tell you, that anytime there is a vertical rally, it becomes a little uncomfortable to enter a trade at those highs, just because it is at risk of filling that rally back down. You can see that there was a vertical sell-off here, and then the vertical rally filled it right back up. So anytime there's a vertical rally, you want to kind of ease into your positions rather than take on a full position at once, because you never know when that vertical rally needs to be corrected or alleviated, and all these people start taking a little bit of profits, and then you may average down at a lower level. So if SPY continues to break out above 441.09 and it does not pull back before the breakout, it likely means this is going to be a fake breakout and SPY will pull back and retest 438.60 at least. But if it does break out, our next price target is going to be right around 444 to 445, and above 445, the next price target is going to be around 451. This is a very aggressive price target. We do not expect it to hit it this week. If it does, that's pretty awesome. But if it doesn't, that's completely fine. This is why we like to take time on our calls. Make sure you're giving yourself a few weeks, preferably even a few months. You'll spend a little more upfront, but it is a little bit more of a safety precaution in order for you to protect your capital. Now to the downside, if SPY breaks below 433, we may consider shorting or playing a put on it towards 426.40, and below 426.40, the downside price target is going to be right around 423.50, which comes from this gap fill that we created in the beginning of November. Now the next stock on our watches is going to be Apple. Apple has also been seeing a very nice vertical rally, not many strong pullbacks, and so watch out for that. Relative strength is still strong, which is very impressive, but just keep in mind, as we mentioned earlier, these stocks are a little vertical, could use a pullback, so give yourself time. If you're looking at Apple on the daily chart, you can see that it is also back above the 100-day moving average. In fact, Apple is trading above all of its healthy moving averages. And you can see the significance of breaking back above a moving average from when it broke above the 200-day moving average here. You can see that it rallied since, and now that it's above the 100-day moving average, it is also rallying. And for those of you who do use moving averages, quite often you do see that there's a cross up here on the 10 and 20, which is even a more bullish sign. So here are some shorter term targets and shorter term levels on Apple. First of all, we have a support right around 183.50. If it breaks below that, then it can fill this gap. You can see there's a little gap here down towards 182. The support is 181.50. You can see that there was a 1, 2, and 3 bounce at that level, which is a triple bottom. And so if it breaks below that level, then we do see it coming down to 178. We may consider taking puts or shorting the stock if it breaks below 181.50, but we would not be swinging any puts on Apple unless it moves below 173.30. This is a pretty aggressive downside price target, and so that is unlikely to happen this week. If it does, it will happen over the next few weeks. The next stock on our watches is going to be NVDA. NVIDIA is one of the strongest names on the market right now. That and Microsoft, which just hit a 52-week high, but NVIDIA in specific is a very strong name. They have not reported earnings yet. They're one of the last companies or the last large cap companies to report earnings, but so far they are looking very bullish going into earnings. Like Apple, NVIDIA is trading above all of its healthy moving averages and also crossing up, which is a bullish sign. Now, NVIDIA's next resistance is going to be right around 488.20. Buyers will need to break above that point in order for them to continue the rally towards that 499 to 500 level. Again, this is a very vertical chart, so make sure you're positioning yourself in a way in which you can afford to average down and you can afford a large pullback. So giving yourself time on calls is going to be very important. And if you can't afford those expensive long-dated calls, just simply avoid the trade and go into a trade that is more suitable for your own account. So here in this case, NVIDIA's downside support is going to be right around 472.80. A break below that can take them to 465, and that's when we would turn a little bearish on the stock. We would consider a put or a short position down towards 449 to 452 in this case. The next stock on our watches is going to be Tesla, which had a worse week than the rest of the market. You can see that while the market rallied, Tesla dipped, and they have been struggling since their earnings. So that tells us one of two things, that if the market continues to rally and Tesla does break out above 227, which is this rejection here, then it can quickly catch up to the market and rally very rapidly. However, if the market sells off or pulls back, there's a very good chance that since Tesla has not been able to gain any kind of buying momentum, that Tesla will be one of the ones that rapidly sells off. Now, here's some levels to focus on. If you are looking at Tesla, first of all, you have a resistance at 215.70 and 221.20. These resistance points don't mean anything to us. They're just there as guidance. The real breakout, as we mentioned, is going to be above this 227 rejection. If it can break above that level, then we can see it filling the gap towards 239 to 242. To the downside, if Tesla breaks below the 205 support, we would consider entering a short or a put position, a very small position, and we would increase our position if Tesla moves below the 191.25 support, because then it can turn very ugly very quickly towards 178. Again, this is a very aggressive downside price target. We will be updating these levels later on this week, so make sure you're checking back in. The next stock on our watches is going to be AMD, and AMD has had a phenomenal run since their earnings. We are holding the stock in our group. We have been holding it. We are up about 10% on our shares position, and we actually traded options on AMD, and we closed out for a massive gain last week. So overall, we are very happy with the stock. We will be trading AMD again in the coming weeks with our group. If you're already in our group, expect that in our alerts group. If not, then make sure that you check out the links below to potentially join us. So for AMD, also above all healthy moving averages, there's a cross up, there's a MACD histogram in the green, RSI is moving to strong levels. Overall, we're very, very bullish on this stock. But if it sees a pullback, we are prepared for it. That's why we have the downside supports. The first support we have is the 116.50. Completely fine if it breaks out. The real support we needed to hold above is the 112 support, which is the breakout support from this triple top breakout. So you can see AMD got rejected here 3 times, broke above it, and continued rallying. So now we need buyers to defend that level going forward. The next resistance on the stock is going to be 119.75. Now, if you did trade this stock from our last update, this was our price target, which was 119.75. If you look back at our videos, you'll see that this was our price target. And you can see that AMD got rejected right at 119.70. So resistance points are price targets for a reason. It's because this is a level that buyers were not willing to pay above at a certain point, which makes it a price target for us. Now, if it does break above that level should automatically turn into a support, and the next price target for AMD would be around 123 to 124. The next stock on our watches is going to be Meta, which is very close to creating a new 52-week high, moving closer to its all-time highs, but still a little bit of a way. Now, if we look back on Meta and we look at the weekly chart, so I know we've been starting with the daily chart for most of these stocks, but if we go even into the weekly chart, you'll see that many of these stocks are starting to form very strong bullish signals and patterns. So in this case, Meta has created a large bullish flag on its weekly chart. And remember, the longer the time frame that the pattern is being formed on, the stronger the follow through or the stronger the failure. And so in this case, it looks like Meta is trying to follow through on this bullish flag. And so if it is broken above, the rally will be tremendous, and we will be capitalizing on it in our group with our group. Here are some levels to focus on for Meta. If you are bullish on the stock, you are happy above 325.80. If it breaks below that level, then it doesn't really have much of a support till around 318.70, but we wouldn't turn bearish on the stock unless it breaks below 314. Keep in mind, like many other stocks on the market right now, Meta is forming this wedge up sharp vertical pattern, so a very dangerous pattern, because if buyers decide that they want to give up, or some kind of catalyst happens on the economic front, then it can easily turn this back down very quickly. So be careful when it comes to position sizing on any vertical rally. Now, the next resistance for Meta is going to be right around 330.60, and the price target is above that is going to be right around 336 to 337. Now, last but not least, as promised, we have a VIX update for you, and VIX is looking like it is forming what is known as a bearish flag, and it is trading below all of its healthy moving averages. VIX measures market volatility and it tells you what's going on with SPY in terms of volatility in specific. So you can see that right here, implied volatility is around 13%, 15%. And so if we go into the last day of this week, which would be the 17th of the month, if we go there and we look at the implied volatility for that date, you can see that it's around 15%. And the only reason it's so low, typically this is closer to 20 to 25%, is because VIX, or the volatility index, is currently low, which measures the implied volatility for SPY in specific. And so if we look at this, by Friday, with a 15% implied volatility, the market is expecting a $6.50 move from SPY, either up or down. And so if SPY does not move at least $6 up or down, all these contracts will nearly be crushed to zero, apart from the ones that are in the money on either side. So that concludes our video. I hope you guys found that helpful. Make sure you subscribe and like, and check back for our next video.